So some people in the industry really don't need an introduction, but if they didn't need an introduction, I wouldn't have anything to do, so introduce I will. Mike Novogratz has been a visionary in the space for quite some time. He's the founder of Galaxy, which has been a behemoth in the space, and just has done some wonderful, wonderful legwork and carrying water for the space at large. He's one of the most prominent voices out there. And then a character to be sure is the co-founder of Reversal Media and a CNBC contributor, Guy Adami. I think this is going to be a very lively, to say the least, conversation. So please welcome these two gentlemen to the stage. Yeah.
Hi, everyone. So I worked at Goldman Sachs from 96 to 03, and it's like they talk about certain people in these hushed tones, like a Kaiser Sose type of thing. And the name Mike Novogratz used to come across the commodities desk from time to time, and I had never met him, but he was sort of legendary in the firm. And I've talked to Mike about this before. I think in 98, I won't mention his name, but somebody made partner at Goldman Sachs in a year where he lost about $175 million in the FX market. And it was hard for me to wrap my head around that, but the thought process was, if somebody's able to do something like that on the negative side, almost by definition, they have the fortitude to do it on the positive side. And I gotta tell you something, that's not a knock. That's actually an extraordinarily valuable tool. And I'm not suggesting you were those types of people. But
I'd like to point out that was not me.
It was not, I said it was not Michael. But the point is, what's the chip? What's that one characteristic that very few percent of the people have? The ability to be fearless in the face of losses, understanding that they could absolutely do that on the other side of things as well. Because I got to tell you something, a lot of people don't have it, and I think it's something that I don't think you can learn how to do it. I think it's almost innate.
Well, listen, the real genius of trying to be a great investor is the discipline not to go down that much, not to lose that much, if it's with stop losses or waiting for good entry point. And that allows you more courage, right? Courage comes from discipline. One reason I love wrestling. Wrestling, you get good not because you will yourself to be good. You get good because you develop a discipline. And great traders develop a discipline. Stan Druckenmiller is literally at his desk at 6 in the morning every single day. Not 3 days a week, 5 days a week. And he goes through the same charts and he goes through a process. And so the lesson I've learned really is that fortitude comes from discipline, comes from pre-planning. It's not, oh, I can't believe I'm down this much. People are down that much often because they said, in my worst case scenario, I'm going to be here and I can still be in the trade because I've got enough capital to be in the trade, because I have enough conviction to be in the trade. But both the ability to emotionally risk manage comes from thinking about it beforehand, and that all comes from discipline. It's why, quite frankly, when hedge funds are down, you know, a lot of crypto funds are down 85%, they're like, yeah, but the market sucked. I was like, well, you're out of business, right? Listen, the market, let's say you're down 80% and the market's up 30% this month, or 40% this month, and you were 50% invested, so you're up 20%. To your investor, you're still down 76%, right? You know, down 80 means you got 20 left. Up 30 on 20 means you got 26, or you're down 74%. You're kind of out of business. And so the game really is discipline.
I agree with that. But discipline in the form of consistency.
Yeah.
I mean, I think consistency is, you talk to so many people, and the one word that continues to come up is consistency and staying with the process and understanding. Listen, the world moves very quickly, and let's talk about that, because we talked before this, and we talk about it on our show. One of the most confusing macroeconomic backdrops we've had in quite some time. There's enough for the bulls out there, there's enough for the bears out there, and both sides can make an extraordinarily cogent case. How do you look at the world right now?
Yeah, it is confusing. Listen, there are a few things we know. China's opening up, and there's going to be an orgy of spending and travel and activity. You know, they're going to use more gasoline, they're going to use more jet fuel, they're going to take money offshore, and so that's going to drive some growth. European winter wasn't nearly as bad as predicted, you know. Global warming, you call it what it was, but I went skiing there and I saw mostly grass. And so Europe is going to skirt where we thought they might have a bad recession. They're going to skirt that bottom and pick up. And so you've got two global positives. Japan's economy is growing as fast as it has since I remember. Three global positives. And the U.S., you know, we have a consumer that is still strong. You know, I was saying this backstage. If you look at what happened with COVID, he give Jimmy Cramer some credit because he was on screaming every day at Steve Mnuchin, you got to do something for the American people. There wasn't a day, not one day, where the American population had income go down. Some individuals might have, but as a whole, you know, disposable income went way, way up, starting from COVID. And then it kind of started coming down as COVID was ending. And then Biden came in and he said, I got a great idea. Let's give another $1.8 trillion to the economy. $1.8 trillion is 9% of GDP. That is a massive number. And so disposable income went way, way back up again. At the same time, people were locked inside, so savings rate went up. And that means the amount of jelly beans they were storing for a rainy day just kept growing and growing and growing. So we've been eating away at those jelly beans, right, as time goes on. But there's still a lot of jelly beans left from that excess of income. And so one reason restaurants in New York and Miami are full, that my hotel room is $1,400 a night. I mean, it's shocking what it costs to stay in hotels because they all get full. And then, you know, that consumer economy is still strong. Labor market is still strong, where the rest of the industrial side has really slowed. And so it makes the Fed's job tricky. They're going to hike 25 tomorrow, and they're probably going to hike another 25, and then they're going to pause. The market says after they pause, they're going to be cutting, right? We see inflation, it could go down to 2.5%, 3%, 2.5%, even 2% by June. That would have the Fed feeling really good. But when you start looking at the reacceleration, there's also a story that you're going to go down and go right back up. And I think no one has a great crystal ball on that. That's going to determine where equity prices go, where crypto prices go, where fixed income prices go. Does the curve, which is as inverted as it ever gets, really start steepening? So that real big chapter is going to play out probably May, June, July, when we'll see that data. And until then, it's a little bit read the tea leaves and wait and see.
What's the analog then? People compare 72, 73. You talked about 06.
Yeah, it's 2006 in that the Fed had taken rates from 1.5% to 4%, but it took 18 months for the economy to really roll over. Right? Remember, oil went all the way to $150 in 07. I say remember, a lot of you guys are too young to remember. I keep forgetting I'm old. But that could be the analog. And it was a really choppy, it was a hard market to trade. Stocks went up, stocks went down, fixed income went up, fixed income went down. Like, last year was a macro market dream, right? Rates went one direction for a long period of time. The dollar went one direction for a long period of time. And so big trending markets are easier to make money in. Choppy markets are difficult. It's not that you can't make money, but they're difficult.
You're one of the first people that said, you know, David Tepper would come on the network for years, and he'd be frustrating in his simplicity. When the Fed was adding liquidity, lowering rates, he'd make it very simple. Listen, don't fight the Federal Reserve. If you're bearish in this environment, you're just doing it wrong. Well, the same should hold true. And you were one of the first people that said when the Fed pivoted in November of 21, you said, look, if fighting the Fed when they're adding liquidity is being bearish, then by definition, if you're bullish when they're turning the page, you're fighting the Fed. There still seems to be some of that going around. I mean, you listen to any of these Fed officials they trot out seemingly on a daily basis. They're pretty steadfast in their belief that they're staying the course. What are your thoughts about potentially fighting the Fed by being bullish in this environment?
You know, one of the most insightful dinners I ever had, the day Alan Greenspan got out of office, he was 84 years old, and Lehman Brothers had a private dinner that they spent a lot of money to get him there, and there were 10 of us, and it was a privilege to be there. I was actually sick, but I was there. This was pre-COVID, so he didn't feel so guilty showing up somewhere sick, and I wasn't wearing a mask. But I was wildly impressed by Greenspan. He was a macro trader, you know, sitting next to Stan Druckenmiller, just as attuned to what the oil price was doing and the impact it was having on the rates market. And I thought to myself, a Fed governor the chairman of the Fed really is a macro trader who is making predictions about what the economy is going to do and what markets are going to do. And I've always thought Stan Druckenmiller would be a great Fed chair. Greenspan was so in touch with markets and indicators, but they're just making the same predictions we are. And so the Fed is telling you what they think is going to happen. Like I just said, like even my crystal ball, none of our crystal balls work. We don't really know what's going to happen by July, August. And so they're making their best prediction. They're acting tough because they lost a lot of credibility by waiting too long to hike. They were just dead wrong, right? Their predictions were wrong on, what would happen to inflation. And so now they're holding tough and they're saying we need to break inflation expectations. We need to have people believe we're going to keep nailing down inflation. And, I think they're going to try, but if inflation falls and the economy falls, they'll be cutting rates by the end of the year. Again, I don't know if inflation will fall that fast or the economy will fall that fast, but I know one thing, the Fed reaction function will be to cut.
Which is historically been their first reaction. It's interesting you talk about it, and I've said this, I'm curious to your thoughts. It's easy getting into trades. I mean, it's very simple putting a trade on. The artful part, the difficult part is getting out, right? It's sort of that whole, but do you need somebody that has a Gary Cohn, a Mike Novogratz, a Stan Druckenmiller, to be able to be the guy or gal to sort of unwind what's become, almost at its peak was a $10 trillion balance sheet, now trending the right way. But do you need that type of skillful person in that seat?
It's complicated. So people ask me why I still like Bitcoin. Bitcoin has two main drivers. One is adoption, people understanding it, understanding the story, making it easier to buy. A lot of adoption continues to go on. If you go on Fidelity now, retail can buy Bitcoin for the first time ever. And so the adoption curve is growing. But the second is a macro story. And the story is that governments are irresponsible, that they spend more than they can, because that's what politicians do, that populism is taking over. And you see that in plenty of places. Look at Turkey and Venezuela and half the countries in the world, at least. Well, why Bitcoin went from 6,000 to 69,000 was it looked like the US, Europe, and everywhere else was just running a bizarro combination of, unlimited fiscal funded by unlimited monetary. And why Bitcoin came down was Chairman Powell and Madame Lagarde collectively really are starting to feel and look like tough central bankers. But the second half of government is Congress, the Treasury, right? It's will the legislative body of whatever country, the US in this case, tighten the belt? Will they actually have rational economic policy? So you have some Republicans threatening to shut down the government because they want the deficit to come down. We still have a 5% budget deficit when we have the lowest unemployment we've ever had. Like, we're supposed to be in surplus at times like this, and we're at what would be crises deficit levels. And so a lot depends on how the government, functions. Like Biden, he got elected by the progressive side of the Democratic Party, wanted to make his mark, and so he spent a ton of money, and he's really proud of his accomplishments, right? We don't have that money. And so watching what governments do, not just next year, but for the next 5 years, my bet is they won't be able to get it together. We won't be able to land the plane, and so you'll have to inflate your way out of this giant debt, and that's why I think crypto comes.
Well, let's talk about it. I don't think it's coincidence. I don't think you do either. That Bitcoin topped out November, December 21, right? It's around the same time that the Fed decided they were going to become, to your point, fiscally responsible. It went from 69,000 to 17,000. What's interesting, though, volatility in Bitcoin until the last couple of weeks has been, I don't want to say historically low, but pretty damn low, under a backdrop where you'd think it would be all over the place. What is now, I think the bull case is exactly that. This Fed blinks, or central banks blink, and then it's back on its horse. Like, how do you look at that landscape right now?
So, listen, Bitcoin is a social phenomena as well as a technological phenomena, right? It's the social construct that gives it its value. What I mean by that is 180 million people around the world in every country have decided to store some of their hard-earned labor in this community called Bitcoin. I call it Bitcoin Nation, right? People have convinced them that, hey, put some of your wealth here because we can't trust governments. And so it is almost like a religion, right? It is this belief system that this new ecosystem that lives outside of national borders can hold some of your wealth. That's hard to change people's mind. And so what happened in 2022, Fed starts hiking rates, they're getting hawkish. Bitcoin should have gone down. It starts going down. It gets accelerated because we have fraud and bad behavior and too much leverage. You know, you name it, Celsius, BlockFi, FTX, Three Arrows, and people just lose trust, lose faith. The institutions that were starting to get in say, oh my God, I'm not getting in, or I'm glad I didn't get in. And you had a complete capitulation. Leverage got knocked out of this system. Anyone who needed to sell sold, right? There was plenty of time, and so have all died. The people that really believed, those 180 million people, they didn't sell. Some of them did, but mostly didn't. And why have we rallied? I'm surprised we've rallied so much. We've rallied for a few reasons, because TradeFi hedge funds, who had a great year in 2022, said, hey, there's blood on the streets, let me get engaged. And so every major multi-strat and macro fund has a crypto pod or a crypto trader. And so they've been buying, but mostly because retail volumes are up 50 to 60% this month versus December. This has always been a retail revolution, right? It's been the little man's revolution, and they're coming back in. There are also crypto whales, OGs, that had sold and waited and were sitting on big cash and say, hey, it feels like the bottom's in, and they've started buying. And so this combination of buying. And finally, I would tell you that something really unique happened in China, right? We had this spontaneous protest day where people were just over COVID. And you know, Xi was saying we're going to double down on zero COVID, and his population said, no, we're not. And that day, people were protesting the COVID policy, but they were protesting Xi. And I think that scared the hell out of him. And so what do you see? A week later, they're like, oh, COVID's over, we're going to let everyone get it and just see what happens. And so they completely pivoted on COVID. But they also sent a message to the tech world that we're going to back off, right? Jack Ma reemerged, and you saw this continued rally of China tech. I've talked to a lot of people in that space, and they were like, crypto's coming back because the government's letting it. And so we don't deal a lot with Chinese retail, obviously, and so this is anecdotal from me, but I think one of the buyers of crypto is Chinese, again, starting to engage. And so, you know, we've had a good rally. Where's it going to go from here? A lot depends on the Fed. I do think we've put the bottom in, and that makes people feel better. I do think adoption's going to keep coming, you know, but there are also headwinds, right? The regulators feel emboldened to do something. In lots of ways, they're trying to make crypto isolated from the traditional system, and so they're making it harder to bank crypto. I don't think anything dramatic gets done because we've got a Republican Congress that's pretty pro-crypto, and you're going to see a to and fro. But I don't think anything really positive gets done on the regulatory front either. And so this is going to be a story of macro plus adoption. And again, if I knew what the Fed was going to do in July, I'd really be excited to. If I thought they were going to be cutting, I'd be tripling my bet. I think that's a pretty, you know, it's a pretty hard bet to make right now on the Fed.
I didn't get into Princeton, but I went to a Jesuit school, and the Jesuits used to say there are no straight lines in life. And 2022, for Galaxy specifically, was there's no straight lines. But one of the questions I've asked people, and I'm interested in your answer, was FTX the best thing that happened to your space, or the worst thing, or some amalgam of that?
No, it was a really bad thing. And it was a bad thing because, listen, crypto is selling itself as two things. As the beginning of the digitalization of all finance that then brings access to the masses in a decentralized way, that makes things more fair and more transparent. And that idea of transparent and trustless and all got blown up by Sam. Like, he snookered a lot of people. It's one thing to make bad bets and lose money, but to steal people's money when you're literally the poster child from the space is just horrible. And so institutional allocators right? If you think of the two big Canadian pension funds, one lost $300 or $400 million in Celsius and one in FTX. It takes a lot of courage when you work at a pension fund to be the guy that says, hey, let's get into this frontier investment space. And so to build up that story, to go through all your boards, to have that courage and have your first two investments, like big investments, just 3 months later, all your money is gone because of fraud, sets back, like who's the next person at one of those pension funds to say, hey boss, I got a good idea.
Yeah.
Let's get into crypto. So it's going to take a while, and you're going to need to see changes and more trust. We at Galaxy, you know, we try to be as transparent as possible. We're public in Canada. We get audited by KPMG. It's a wildly expensive process because, you know, auditing firms are scared of crypto too, and so they double their fees. You know, we post our earnings quarterly and try as much as we can, but the industry needs, and the irony is, the stuff that was done on-chain is all transparent and had no real fraud or crises in it. Had some hacks here and there, but for the most part functioned exactly as advertised. The companies like ours and FTX and Binance and plenty of them that are crypto companies, but in a traditional TradeFi sense, are really the bridges to bring in customers into this new world ecosystem. And there's a really important role to play. And so it's unbelievably frustrating that there was so much bad behavior. I think it's an opportunity for us, right? Sometimes I say, okay, guys, we're the tallest pygmy right now. You know, the whole industry got knocked at the knees. We've lost lots of our competitors. So it's a real opportunity to build a business that people trust. But getting people to trust is harder than it used to be. And so I do think what's going to carry this next chapter of crypto is retail, not the big pension funds, not the institutions.
Trust, it's interesting. You know, complacency ran rampant, and I think part of the complacency was money was free, interest rates were low, people didn't have to do the due diligence because, quite frankly, everything was going higher. I think what we've learned is the rigor, it seems to be coming back, which I think plays to your personal strength. So where's, you know, as we go into 2023 now in earnest, like what are you excited about for Galaxy and for the space?
Well, so one thing that I wanted to be clear, as bad as 22 was, as horrible as it felt, if you volatility adjust Bitcoin and Ethereum, and you look at it from the COVID lows to the COVID highs, to the COVID lows till now, from the highs till now, from 3 years ago, 2 years ago, or 4 years ago, Ethereum has been the #1 asset to invest in the world. That includes all your tech stocks, that includes JP Morgan, all adjusted, right? And Bitcoin has been pretty close to the second. Tesla beat it if you got in at the right time. And so we put a little report that said, really, Jamie? When Jamie Dimon was like just crushing Bitcoin. Bitcoin has been a better vol-adjusted investment than JP Morgan in any time frame in the last 4 years you can look at. And so we should talk about the resilience of this ecosystem, right? It's been unbelievably resilient in the face of horrific news. I mean, you couldn't get worse news. Fraud, cheating, over leverage. And it's, you know, we're sitting here at 23,000. We were 4,000 pre-COVID, right? Look at Zoom. You could have bought Zoom. You haven't made any money, and we all use Zoom every day. Zoom went up, went down. Peloton went up, went down. Bitcoin went up a lot more than other things, came down, and is stabilized, you know, 4, 5, 6 times higher than when it started. And so, like, don't lose the big picture. Like, what are we doing in Galaxy? We are trying to build a big asset management business to convince you guys to give us some of your money to manage really effectively. We had Scott Army on stage before I got here talking about the funds he manages. We're building a Galaxy One Prime, a prime offering for people to trade with, to provide leverage. We have 850 clients that trade with us, all institutional. And so we want to be the #1 provider of, you know, prime services. That's lending, derivatives, and credit. We still have a balance sheet that we invest. We're doing more of that asset management. We bought a big mining company, or a big mining facility in Texas, and we're becoming one of the larger miners, and then have a mining services business. And we bought a security company in Israel called GK8, which is going to be our engine for tokenization, custody, self-custody. We're going to run it like a SaaS business so much. And so 3 real businesses, the asset management business, the trading business, and then the infrastructure business, staking as a service. And so we're going to try to build that out, and as institutions grow, and a lot of it is B2B2C, right? We're servicing these big platforms that deal with retail, and so we're getting our retail exposure through the rest of the ecosystem. But as institutions come back, we want to be the go-to player.
In the final minute we have, I think when Bitcoin was 68,000, I think the vertical was a $2 trillion industry-ish. 3. Where do you, a year from now, I know this is somewhat self-serving, but where do you see this a year, 5 years from now in terms of market cap?
Listen, you can't invest in this space. You can't make your career choice in this space. I have 440 employees, and I tell them, listen, you shouldn't work here unless you believe that digital assets are going to be a bigger part of our life, that Bitcoin is going to continually get adopted, that tokenization, digitalization will happen. Like, there is a belief system to work in this industry, and that means market cap has to at least be $3 trillion again in 2 or 3 years for it to make sense to run Galaxy and to have all these people working here. And so it's a really weird industry, right? You can work on Wall Street, and it doesn't really, it's always nicer when the S&P is higher, but it can still be a really good industry even if the S&P is lower. Our industry is really tied to crypto prices. And so if Ethereum and Bitcoin aren't at least higher, our industry will be smaller. I mean, it's self-evident. But there's like a double leverage there. And so, listen, I do think the industry will be $2-3 trillion in the next couple of years. I see a tremendous amount of talent that didn't leave. Like, we had so much talent coming in, and none of it left. There have been 26,000 people fired in crypto. They're all looking for jobs. Few people said, oh God, I'm going back to TradeFi. But broadly, people still believe in the revolution. And I call it a revolution because in its multiple revolutions, Bitcoin has a hard money, but it's decentralized systems, right? The genius of Satoshi wasn't just Bitcoin. It was the first private property on the internet. Before we had Bitcoin, we had no private property on the internet. Before we had private property, we had no capitalism, right? Thomas Locke in 1689, John Locke, 1689, said there is no capitalism without private property. George Washington said there's no liberty, there's no freedom without private property. If you look at every emerging market growth story, it's after they gave property rights. And so now we have an internet with private property. And so NFTs are going to continue to show up. And you can see Starbucks, all these brands are going to use NFTs, right? And so you're going to have medical records there. So many businesses are going to grow because we can actually have unique assets on the internet. And so couple that with the fact that each of us spend more and more time in the metaverse on our phone. Like my screen time is 6 hours a day. It's humiliating. But my kids is even higher when they add all their screens. And so as we spend more and more of our time in a digital world, it's just intuitive to me that you're going to have digital currencies, digital private property. They're going to be a more important part of our lives. And so that's the bet Galaxy's making. It's the bet all of my employees are making. And I think, again, we will win if we execute well. There are other people that will win if we execute poorly. But the industry is going one direction.
Always fun to talk to Mike Novogratz. I could do this for another hour, but time does not allow. Thank you, Mike Novogratz, and thanks, folks, for joining us.
Thanks, guys.